Hey, what's up, guys? This is the JuarezTeam here. This is Fern the Burn, and I have a lovely, lovely guest with me here today. It's Gary.
Oh.
So, Gary, would you like to introduce yourself to our lovely
Sure,
fans out there?
thanks. Gary Matsumoto from South Bay Equity Lending. We're in Redondo Beach, and love doing business with you. Love working with you.
All right, thank you for being here with us, Gary. So we have some questions here for you looking out there for a mortgage loan. So first things first, what I like to do before getting someone started in the home search is getting them qualified for a mortgage loan. So you don't have to always get qualified by a mortgage home lender. You can get qualified by your tia, your tío, your mom, your dad, or somebody that happened to leave you some money. But for this situation, since we're looking for a mortgage home loan, we're gonna stick with that. So let's ask some questions here and let's see if we can get some clarifications for some of you looking for a home loan. Let's start off with the basics. What's the minimum age requirement needed to qualify for a home loan?
18. You got to be 18 for a mortgage. You got to be 18 to be on title. So 18.
There you go, guys. 18 for not only a mortgage home loan, but to be on title for a home. Okay, that's good to know. So then, what financial factors should be evaluated when determining to buy a home, and or what credit score is needed to buy a home?
Yeah, good question. So, when you're getting qualified for a mortgage, we always check three things. We're going to check your credit score. We're going to check your assets. That's like down payment, closing costs, what you're going to put into the transaction. And then we're going to check your income and how that's relative to your debts. So your income, assets, and your credit score.
Nice. Okay.
And you ask, what's the minimum credit score?
Yes.
Actually,
credit score.
Minimum credit score is it depends on what program you're going through. So sometimes we can go pretty low, 600 even, sometimes below that. The higher your credit score, the better. But I think most important is that whatever your credit score is, there is potential to improve it if we work on it. So if we pull your credit score and it's not where we need it to be, I can help you figure out how to work on it.
Nice. That sounds good to me. All right, and then work. How does that come to play? Do you have to be employed in order to qualify for a home loan?
This is a really good question. Typically, for most programs, you do need to be employed because we check your income. But is it possible to buy a home without showing income docs? It is possible. There are, for example, investor loans like DSCR loans where you can just show that the rent coming in is going to pay for the mortgage and we can qualify for a loan. There are stated income loans out there. So it is possible. Your typical one, you would need income, but it is possible.
Okay. Yeah. And suggested how long of employment at that location? Does it have to be employed at a
really good
certain employment or
right.
various ones?
So so under conventional guidelines, you would want to show 2 years worth of employment, right? If you're on salary, even if you've only recently joined that company, as long as we show that you're on salary, then we can take that income. Oh. If you're hourly worker, or if anything is any income that's variable, we call it. So like income that comes from commission, income that's hourly, part-time work, we need to show a 2-year history, and then generally you'll average that 2-year history.
Oh, okay.
That's the general thing.
So it could be different employments of sales within, but they're going to average your 2-year expansion?
Well, so if it's
same employment.
Yeah, so if it's variable, we want that same employment usually for 2 years.
Okay.
Now there are exceptions to that rule.
Right.
But let's say, for example, you have a full-time job, but you also have a second part-time job, right? That part-time job is variable. So if you've done it for 2 years, then we can take that income as long as we'll average it over 2 years. Okay. But if you've only been doing that job for 6 months, then we can't count it. It might help you afford the home, but as a lender, it's not typically counted.
That makes sense. Okay, that makes sense. And now you had mentioned earlier your debt income ratio. So
right.
what does that all mean? For
debt to income ratio is kind of like the main calculation for lenders of how much home you can afford. So the easiest way I like to explain to home buyers is you take your monthly income. Let's say you make $8,000 a month. Okay, so you take your monthly income, you cut that in half, $4,000. And the reason why you do that is because usually the most debt that you can carry in relation to your income is 50%. So 50% of your income can be dedicated to debt. So that includes everything from credit cards to car payments, student loans, and it also includes your future housing payments. So the principal, interest, taxes, and insurance on the house.
Okay.
So if in this particular case, if you're making $8,000 a month, you can afford up to a $4,000 worth.
Wow. Okay.
Again, exceptions to that rule do exist.
Right.
That's just very typical.
Right. Okay. Nice. Thank you for that. So now tell me the differences and or benefits of FHA loan and or conventional and or VA loans.
Oh wow! Oh, those are all very different. So let's start with conventional. Conventional loan is, it's for really anybody buying a primary or a second home or an investment home. For first-time home buyers, you can put down as little as 3%, but typically the minimum payment is the minimum down payment is 5%. Typically, FHA, the minimum down payment is 3.5%. So sometimes you can get in with a lot less down doing an FHA loan. Of course, they'll FHA loan has its advantages and disadvantages. If you have credit issues, credit challenges, FHA is easier to qualify than a conventional.
Oh, wow.
Right?
Okay.
There are situations where an FHA might cost a little bit more, but again, if you're credit challenged or if you want to put less down, sometimes FHA is the way to go.
Right. Okay.
Also, FHA, you can't buy investment properties with it. It's owner occupied only. You got to buy your own home, so no problem there.
Right.
But if you're buying an investment property, then you're more likely to go with a conforming loan. VA is one of my favorite types of loans. Again, you've got to buy your own home. You can't buy an investment with VA. But if you're looking to buy your own home with no money down and a low interest payment, VA is great. So if for veterans out there, give me a call because those are really good deals usually.
So what's considered an FHA loan? Who qualifies for a FHA loan?
Anyone has 3.5% to put down and is buying their own home.
But FHA stands for first-time homeowners.
No, FHA is the federal housing.
Housing. Okay.
Yeah.
So that makes a big difference because a lot of people think it's for first-time home buyers.
First-time home buyers. No, there are programs for first-time home buyers. You do not have to be a first-time home buyer to qualify for an FHA loan. Okay. But there are some programs that you do need to be a first-time home buyer.
Right.
So in order, on a conforming loan, if you want to put only 3% down, you have to be a first-time home buyer. For example. But no, FHA is not for first-time home buyers. Okay. It is really for anyone.
And we've talked about FHA loans, conventional loans, and VA loans. Now, what's the difference between a fixed rate and or a adjustable rate?
Fixed rate, adjustable rate. Good. So fixed rate means that it's fixed for the whole life of the loan. So if you have a 30-year fix, it's going to be that rate for 30 years. Doesn't mean that you can't refinance it out of it. You can. If the rate drops, you can refinance it. But basically, it's fixed for 30 years. Adjustable rate mortgage, the most common is it's what they call an ARM, adjustable rate mortgage, ARM. It's usually fixed for a certain number of years, and then after that number of years, it will be variable. So the most common is 5 and 7 year ARMs. Right. So if for a 5-year ARM, for example, it'll be fixed for whatever that interest rate is that you got it for 5 years, and after 5 years, it will adjust. So if it's possible for that rate to go down, and it's possible for that rate to go up. It kind of depends on the market. Right. And there's usually a ceiling and a floor, so it can't go below a certain amount and it can't go above. Usually people will get into adjustable rate mortgages if they know that within that 5-year period, they might either be moving or they might refinance or they have, a way to get out of it. Yeah. So, but some people stay in it for a longer.
Okay. Possibly. Is there any benefits in staying with fixed as opposed to adjustable, or is it depending on the time of that you're getting in?
Typically, actually, ARMs will start at a lower interest rate than fixed rates. Okay. So if you're only going to be in that loan for 5 years, then why not pay a lower rate, right?
That makes sense.
Yeah. ARMs. Yeah. So it's possible that ARMs are lower. There are times in the last 12 to 24 months, actually ARMs were actually worse than fixed rates. So why even do that, right? Why get into that? So most people have been doing fixed rates, but typically in a normal market, ARMs are like a little bit lower than.
Oh, that's really good to know. Yeah. That's really good to know. Okay, so I have one other question that's important to a lot of viewers out there, especially those that have come up to us for questions, is can they qualify for a mortgage loan using an ITIN number?
Oh, yes, absolutely. And I've done those before. There's going to be different requirements. So your typical conforming loan, an ITIN borrower would not qualify, or FHA or VA, right? Okay. But there are what they call non-QM, non-qualified mortgages. Non-qualified mortgages is anything that's not conforming and not government-based that they can qualify for, and that's one of the programs. Okay. Typically, you're going to need about 15 or 20% minimum to put down. But yeah, it is possible. Okay. Yeah. And then there are a variety of ways that they can show income too.
Nice. Okay. Now, another question before we get any further. You said show income. If an individual qualifies for, say, a $300,000 home, and they need to show more income from other sources, do those individuals that show income on these other sources, are they also going to be on title and or on the loan?
Good question. So not everybody who is on the loan has to be on title. That is not like a law or anything. So if you and your aunt are both on the loan, your aunt doesn't have to be on title, but I would say it's probably recommended that she be on title, because otherwise she's liable for a loan and she doesn't have any recourse. She doesn't have ownership in the house if she's not on title. Yeah. So typically you would want anyone that's gonna be on the loan to also be on title. Right. It makes the most sense. Yes. But you don't have to. Okay. And the reverse is of course also true. If you already own a home, and you need to cash out and you need to get a mortgage, your brother and your sister and you're all own the home, not every single one of them has to be on the loan to qualify. So like if one of them, for example, is still on title but their credit is shot, they don't have any income, so there's no reason to put them on the loan. You can just do that by yourself. Oh wow. So, yeah, so not everyone that has to be on title, or not everyone that's on title has to be on the loan, and not everyone on the loan has to be on title.
That makes sense. That makes sense. Yeah, makes sense. Okay, and then I have one more question before we wrap it up.
Sure.
What's the cost for this, for qualifying for a mortgage and going through the process?
There's no cost to qualifying. There's no cost to check, which is why you always, if you're looking to buy a home, you always ask a lender, and you get pre-qualified, or you get pre-approved, because it doesn't cost anything.
Right. Yeah. Right. Now I know there is a way for us real estate agents to be checked. You just go to California BRE website and you can check our information with our CalBRE number. Is there a way they could do the same thing with you? Do you guys have a certain license number for lending?
Yes, NMLS. NMLS is the license that all loan officers have to hold, especially brokers. Bankers do not, because the bank themselves has the license. So if you're work for U.S. Bank or Bank of America, not all of them have NMLS licenses. They don't need it. But if you're a broker, you have to have it. So you can always check with NMLS.
Perfect. Now it brings me to my next question. What's the difference between you being a broker or working for a brokerage and working for a bank?
Oh, awesome question. So the biggest difference really is that banks have a smaller number of options. So a typical bank will have a conforming option, or an FHA option, or a VA option, say, and that's pretty much it. But if you're the type of borrower that needs, let's say you're self-employed, and on your tax returns it doesn't show that you make as much as you actually make, well, that banker will turn you down. But a broker will say, well, we have this many other programs that we can get you a loan still. Nice. Non-qualified mortgage, right? None of the conforming or government loans. And we have that option. So brokers will have all the regular options that the banks have, plus these other ones. So that's an advantage for the broker for sure.
That's a big advantage. Yeah. Big advantage. All right, well, I think that sums it up for all the questions that we have for today. So if you like what you heard and you're looking for a lender that meets all your needs, well, Gary's the one to call.
Yeah.
So if you like, the number's on the bottom. If you're looking for a real estate agent, well then, the number's below. This is From the Burn with Gary. Thanks again, Gary, for your time.
Appreciate it.
We'll see you out there. Hope to do a deal with you soon.
Absolutely.
Peace.